Okay. Hello, everyone. Welcome back to the show. Today, I have several active community members from Bitcoin Cash. We have John, who's the co-founder of General Protocols. We have Jeremy from the Bitcoin Cash podcast, and Kalisti.cash, who is an active community member and software engineer. So welcome all three of you, and thank you for making the time to join.
Thanks.
Glad to be here.
Yeah, glad to be here.
So many people may not know too much about Bitcoin Cash. They may discount it as just another hard fork from the original Bitcoin. So actually, John, you with General Protocols, you're actually building peer-to-peer UTXO based open source financial tools and services on Bitcoin Cash.
That's right.
And some of your products include AnyHedge, which is a protocol, a smart contract-based protocol that facilitates synthetic derivatives trading on the Bitcoin Cash network, and BCH Bull, which is a web application built on top of AnyHedge, which allows instant on-chain smart contracts to speculate and stabilize Bitcoin Cash against a number of assets. And Bitcoin Cash is currently a top 30 cryptocurrency project by market capitalization. It has over 2 billion US dollars worth of value locked up within its ecosystem at the time of this recording. So, with that basic overview, for starters, why do you think Bitcoin Cash was created in the first place? Many people kind of have a bit of history with that as to why. And why do you think it has endured this long? And what makes it different than other notable hard forks such as Litecoin, Bitcoin SV, and Bitcoin Gold for, right off the bat?
Yeah, no, first of all, thanks a lot for that great intro. That was an excellent summary of everything. I really appreciate that. So why does Bitcoin Cash exist is kind of the same question of why General Protocols chooses to build on Bitcoin Cash, which many from the outside might think is an unusual or surprising decision to base a company on particular chain and building products on that chain. And they're kind of the same answer that those of us in BTC back in the day, there's a lot of information, misinformation, opinions, fire, toxicity, etc., around the block size wars. But fundamentally, if you can set all that aside and just believe the words, many of us in BTC at that time believed that it needed to just continue doing what it was doing, which was scaling on chain, doing activity on chain, and continuing to develop the vision of P2P electronic cash. And so those of us who saw that was necessary believe that it was basically being hijacked, to use some inflammatory vocabulary, but that it was being hijacked and it wasn't going to work out if it kept going in that direction. So we tried to make Bitcoin go in the P2P cash direction, but the failure was the fact that we had to end up forking off and creating Bitcoin Cash back in 2017. So that's where it comes from for us, and that's why General Protocols is building on Bitcoin Cash, because it does that. It keeps working as peer-to-peer electronic cash, and it keeps developing. As the UTXO Alliance talks about the full potential of UTXO. UTXO is not relegated to only doing send and receive. The Bitcoin virtual machine since 2009, it already included a scripting language, right? It was obviously intended to do some kind of smarter things than just sending and receiving. If it wasn't, it would have had no need for any kind of scripting language whatsoever. So yeah, that was kind of the intent, and we believe that it's possible to do that with scaling and much more power. So power without influencing the scaling, without damaging the scaling. Very similar to the things that are written on the UTXO Alliance kind of statements, and I probably Ergo and everybody else agrees with that. So yeah, so that's why we build on it. It's the chain that we think has the biggest potential, the biggest long-term potential. And the UTXO design is part of that, right? It has the largest potential for scaling and the capabilities. So yeah, that's why we're there. And how does it compare to others? That's that's a very long question, but Jeremy is probably a good person to answer that.
Right. Well, to me, why was Bitcoin Cash created? So, the key point for me is that Bitcoin Cash was created in 2008 or 2009 when the network was started by Satoshi Nakamoto, right? It's very important to understand that the Bitcoin Cash community is just the continuation of that original project. So there was the split in 2017, obviously, and some parts of the community went one way and some parts went the other way, but the lineage does sort of trace from that early beginning. And so the Bitcoin Cash community is sticking to, like John was explaining, what the original project was in terms of the mentality of it being an actual currency that you can use. Of course, as we've seen, BTC has kind of lost its way. First, they changed their mind to be digital gold. Now there's like ordinals and inscriptions. Nobody really knows what's going on there. And so overall, they're kind of ending up in a bit of a mess. Nobody knows if they want high fees or they want low fees, how much smart contracts or Taproot, what they should have in there. It's a mess, right? But Bitcoin Cash is still peer-to-peer cash in terms of the mentality of the community, and people are very willing to use it in commerce, but also technically, as I'm sure you understand, the UTXO model, the scaling, all that same kind of stuff. So what sets Bitcoin Cash apart in my mind is firstly the UTXO model, which is actually becoming less common in cryptocurrency, but obviously there's still plenty of coins that do have it. But I think as time goes on, they're going to pick up a lot of traction. The EVM model was able to get a ton of early momentum because BTC refused to scale and the Ethereum side didn't. So of course, that was where all the devs and innovation went. So it's very important that it's a UTXO model. But the bigger thing to me is the history and the community, the fact that it has been around through all that time and that it has survived essentially since 2009 in an unbroken succession. And even after the split with BTC, BCH then had further forks with BSV split off and eCash, XCC, they also split off. So Bitcoin Cash is the only coin in existence that has had three entire chain splits. BTC has had one, BSV has had two, Ethereum has had one with ETH Classic, and essentially there are no other major instances of that. So BTC is very unique in that regard. And that's because it's the only chain that has, at least to my understanding, proven a decentralized model. It's the only coin that has ever rejected the leading software development team twice, with the split from BTC and the split from XCC. So in any other project, whoever started the chain or was running the chain or, writes the node software is de facto in charge of the chain. And there's no proof that if they were captured by special interests or by their own finances, whatever was the case, by government pressure, that they wouldn't just fold and take the project in a direction that nobody, in the community wanted. But BCH has proven on multiple occasions, and it's entirely unique in that regard, that the community can sort of outvote and kick out even very skilled and very high profile and very, well-known or reputed in the community developers. So a combination of those two factors plus, so the history, the branding and the technology mean, to me, it has the best chance of becoming an actually widely used economy in the real world, right? What I say is the global reserve currency. It's the sort of end goal. So yeah, to me, that's what sets BCH apart.
And for those unaware, because they may not have been in cryptocurrency more than a few years, there was a schism about the block sizes, right? And this idea that Bitcoin was going to be this very immutable thing that rejects any innovation past what has already been pioneered back in 2009, and this push and schism to push in a different direction that would actually scale properly. Can you guys kind of put together the context of what that was like at the time, that infighting, that conflict that ultimately led to your fork?
Yeah, Callisto, do you want to get in here? Or?
Well, I mean, frankly, John is going to be the one most qualified to answer that question, given that I'm actually came into the BCH scene post all of the splits, post XEC, post BSV, whereas John was there in the trenches himself. So I think he should take the torch on that one.
Yeah, but before I do that, Jeremy, you want to do it? Because I don't want to get into a toxic waste dump. But
Right.
you have a good summary for that?
Okay, well, so yeah, this does get into a lot of history, and certainly a lot of people, John and myself, being quite involved, can be quite emotional about it. Let's say so.
Yeah.
We'll try not to get into the long version of this,
Exactly.
or the emotive version. But the summary is that Bitcoin is, as many people know, in some respects almost a bit religious, right? And it was more like that in some respects in the early days, even than it is now, right? Because the people who are involved were the most ideologically driven. Now there's a lot more people who are in it for the finance, or they've come for the technology or the marketing or some other element. But originally it was far more ideologically driven, freedom for the world, peer-to-peer, non-government system, all of that, right? Was almost at a point of religious fervor, which was required because the original community at its small size was not able to deal with. Think about how many people were doubting this is going to fail, it's going to die. People today are still swarming all over it. And you think back then, the size of the community was a fraction of what it was, and it had a lot less history to back it up. So you needed a lot of faith to be heavily involved. So because of how, almost quasi-religious it was in that sense, when the direction of the project became unclear, which, if you ask me and ask John, was a result of some sort of deliberate sabotage. There was a lot of censorship on the main forums that were discussing Bitcoin, which at the time was Our Bitcoin, the Reddit, and also Bitcoin Talk forums. Both suffered heavy censorship, and your listeners can look this up and verify all the history. It's all out there, right? But the idea was to create an authority-free, government-free money. Freedom of speech and all that is obviously clearly a part of it. And it's very ironic that BTC people today still say they want freedom of speech and so on and so forth. But the genesis of it, at least their ideological half of the community, was to suppress the discussion. So even though the BCH side had, at least in my mind, obviously, the BTC side will tell a different story, had the more sensible scaling plan that followed both the original advice of Satoshi as the creator and also, just the sensible plan for increasing the scale of a currency. Technology improves over time and you have to adapt your software to accommodate that. Even though that seemed to be the obvious choice, all of the censorship essentially changed the narratives by cutting down on the opinions of lots of the early adopters, and that fragmented things. Obviously, some people stuck with BCH when there was a split. Some people kind of lost faith in the whole thing and left entirely. Some people moved on to Ethereum because that's where the action was kind of picking up. And some people sort of swallowed the bullshit and stayed with BTC, or they just believed that side of the story, right? So all of that kind of happened in this period from about 2014 to 2017, and it led up to the split where BCH split off in the end because there was many attempts to find compromises, and there was several conferences and all of that. But of course, Bitcoin is decentralized. That's one thing everybody agrees on. And so there was no, especially back in those days, there was no real governance process. Nobody knew who was in charge or what was going to happen. There'd never even been a split. It was not known that this was even possible or feasible. It was theoretically possible, but nobody had seen it work in practice. Would the smaller chain die? Would one chain swallow the other? Would they coexist? Would miners take a big role? Nobody had any idea. So the actual launch of the alternative in BCH was quite traumatic for the community in that regard, and that's why initially it's suffered so heavily, and it's only now after several further splits finally starting to get back onto a good path. So there's a lot more to say about it than that, but as a long and short summary, that's kind of how I'd put it. John?
That's great. Yeah, no, you did that very well without getting into the emotional parts of it and the yeah, emotive parts of it. But yeah, just one more thing to add to clarify there was a lot of um yeah, what I would say are complete trash narratives that developed at the time around various sides, right? Like BSV was developing their narrative, and the digital gold narrative was being developed and so forth, like all these things, right? And to summarize it all, there's a false dichotomy where people say, oh, this is digital gold and that's P2P electronic cash, that's digital cash. But the original non-toxic maxis, like before maxi was a bad word, when it was still just a bunch of ideological people who wanted to do something great, like maximalists didn't used to be a bad thing. The idea at the time was Bitcoin will be able to do everything. And so that included all kinds of powerful smart contracts and scaling to the world and all of those things. And so Bitcoin Cash retains the idea of it's not digital gold or just cash or whatever. It's everything. It's a whole money system that will serve a whole economy, serve as a platform for a whole global economy. So yeah, there's just this false narrative of gold or money or cash, and Bitcoin Cash is not that. We believe it can do everything.
Or DeFi as well is now like a third camp in there, right? Gold or cash or DeFi. Well, BCH can actually be all of them, or at least
that was the original plan since 10 years ago, more than 10 years ago. It was the plan to just do everything. Yeah.
So you view Bitcoin Cash as a programmable smart money that can be used for many different purposes versus the narrative of simply a storage of value that can be just traded and swapped and held, which is what Bitcoin, the original community, ended up basically staying with.
No, we were the original community also. BCH was the original community also.
Right.
Yeah.
Right.
And there was just a difference of opinion. Yeah.
Right.
Yeah. So
right.
yeah. So that narrative appeared in around 2016, 15. That digital gold narrative didn't exist for more than 5 years of Bitcoin's history, and that digital gold narrative appeared at that time. So yeah, we didn't think, we thought that was a very narrow, unnecessarily narrow and self-defeating view of things, that artificial fee market. Anyway, yeah, it's there's much more story to it. Yes.
I think the best way to understand it, especially in retrospect, is you kind of need to think of it from, everybody hears these same things about store of value, medium of exchange, and unit of account. So the BTC to BCH split is really at the core of it about which side drives which side. Everyone agrees unit of account only comes once you have loads of adoption, right? The BTC side, they think if it stores value, if number goes up, if more and more people pile in this kind of Ponzi scheme way, then eventually once everyone's got it, they'll start to trade it. That's kind of the idea, right? And that's why at the moment they're very happy that their price has gone up a lot. But on the other hand, they're kind of struggling with the fact that fees are rising, Lightning Network is not everything it was cracked up to be, and so on, right? And the BCH community thinks it's the other way around, which is that if there's something that everybody wants to trade, if it's the most tradable thing, then it will accrue value because more and more people will be brought in by economic forces, to continue that trading, right? So from, the downside of losing the brand and a lot of other factors and so on was that the BCH prices declined, but through the entire period, it's still always been a perfectly tradable thing. The fees have always been low. It still works instantly. There's not delays and backlogs and problems. And the community also, in their mentality, is a lot of BTC people, they tell you this big story about BTC, but then you say, hey man, can I buy a cupcake off you in BTC? They don't want to do it. No, I want to hodl my BTC. How are you ever going to have an economy? They think one day in the future that it will develop into an economy. No, it was an economy today, at least in BCH, and it was in the early days. That's why the whole pizza story is so famous, right? The BTC people think, no, that guy was an idiot. Laszlo was an idiot because he gave away 10,000 BTC. Imagine how rich he would be if he held on to those. Well, firstly, he's rich anyway because he had more BTC besides that. But secondly, It's the other way around. His BTC only became valuable because he was willing to trade them. So the BCH community is more in that vibe. If we create a circular economy, we have the best medium of exchange. It will, in the end, accumulate the most value. That's the distinction.
Which is a very important point, right? That's another part of why we build on Bitcoin Cash is the permissionless network is a unique value that people talk about decentralized, but some of us focus more on the permissionless aspect that if you really want to compete with fiat, you can't exactly play by fiat's rules. And if you're working in systems and trying to be friendly, perfectly friendly with the legacy finance system, you're not really going to have any impact. You're not going to disrupt anything. And so, yeah, that's an important aspect for us to have the permissionless network where, yeah, anybody in the world can participate. A whole economy can develop on it, and it will actually give the fiat standard a run for its money, making everybody more honest in the process. So, yeah, we have a long game in mind.
So we see that the remainder of that original community that you were also a part of, the people that decided that we're going to stick with the immutable ledger and not choose to push past the capabilities that originally they had in 2009, right? The people that remain back with that part of Bitcoin, they're now running into some issues over the next 10 years as they don't have, obviously, the subsidies for miners to continue to be incentivized to do proof of work. They have to rely on transaction fees, and there's a lot of bottlenecks with that because they chose not to scale up towards more widely adoptable peer-to-peer cryptocurrency, right? I wanted to kind of briefly touch on how you view the account-based model as well, right? Because it seems that because of what happened in the early 2010s, Ethereum chose to do smart contracts first, and then all the account-based modeling came after that, and the EVMs and all of that programmable money. How do you guys view that account-based model? Because over here with the Ergo community and many other UTXO-based chains and the Alliance, we all pretty much agree that this would be the best transaction architecture to do programmable money. But yet, obviously, we see that Ethereum has trailblazed an account-based model that also has problems scaling up as well. So I just kind of see all of these roadblocks, people waiting and depending on layer twos to come in and save the day for the layer one. And from what I understand, correct me if I'm wrong, Bitcoin Cash foresaw the problems that could happen if you don't really choose to advance with technological necessity.
Can I say a quick thing, and then I think Callisti would probably be excellent for answering this issue. I sent you a link to an old article that was published in 2019 that we helped write. We didn't write it, but we helped editing or reviewing and so forth. That's a article by Roscoe Callis about it compares smart contracts on different platforms at the time. And this kind of reasoning, what you said, and not only what you said, but more than that, is the reason that General Protocols chooses to build on Bitcoin Cash. Because like I said, from the outside, it looks like a questionable thing to do. Like, what are you doing? And if it were the case that we believed EVM, the Ethereum virtual machine, in any form, could scale to the world, it would be an incredibly obvious decision that we should build all of our products on EVM. That would just be an outrageously obvious decision, right? But we don't believe that. So we don't have any beef or anger or dislike or whatever of EVM. if EVM does manage to scale to the world, I think that will be amazing, right? Because then we'll have two things that can scale to the world. We'll have two competing things that can compete with the fiat standard. It'll be incredible. But we don't happen to believe that that's the case. And that's a big part of the reason, in addition to all the reasons that Jeremy said, that it's actually a decentralized ecosystem. It's actually going to remain permissionless. All of those reasons together are why we build on it. And yeah, I just wanted to say, if EVM can scale, that'll be wonderful. We happen to believe that it's not going to in the end. It's going to be balkanized by the necessity of a global state model that forces everyone to compete for changes of state. So, but yeah, I just wanted to say that it's not a or B, right? It would be wonderful if it can be A and B, if both can be successful. But probably Kalisti has been digging into this quite deep recently.
Yeah.
Is that fair, Kalisti? Yeah.
I've definitely got some thoughts on it, and I mean, I want to build on that and say that a lot of the reason that Ethereum exists is almost similar to the reason that BCH exists. If you go back in Bitcoin's history, with the counterparty protocol, it was we had some developers who wanted to explore Bitcoin's scripting system. Let's remember that Bitcoin script did exist in the original 2009 Bitcoin. This is, to borrow a Satoshi quote, he said that we wanted the core protocol, more or less, quote unquote, set in stone. And what he means by that is the transaction model, the UTXO model, and our ability to write scripts to create transactions. So with that, just saying the resilience is really very important to the historical context. So, just in case anybody stumbles upon this video later and doesn't know the difference between the UTXO model and the account model, we have, of course, one address where all of your crypto goes. And in terms of the EVM chains, you have global state, like John was talking about. And so when we're accessing global state, that means that every transaction that is being processed on the Ethereum chain needs to be ordered in the correct order, so that we know that a transaction that accessed state a couple minutes ago is not going to interfere with the transaction that happens in the future. If that transaction hasn't been processed yet and the state isn't consistent across all of the nodes and all of the participants in the ecosystem, then obviously that means we're out of sync. And if we're out of sync, then you get chain splits and that destroys value. So in terms of UTXO, we don't run into that problem because UTXOs can all be processed independently. As many people know, multi-core CPUs are one of the major innovations in computing over the last 30, 40 years. And being able to parallelize those transactions is what makes the UTXO model scalable. So if you look at EVM chains, one of the major proposals to scale up is rollups. And if you think of rollups where we have those layer twos that a shard of the overall Ethereum transaction space gets rolled up into this second layer, and then that second layer then settles onto the Ethereum main chain. And that's an intended scaling model. It's sort of similar to the Lightning Network, which works somewhat similarly. But instead, on the UTXO model, it's almost like every individual UTXO is its own rollup. You can sort of think about it that way, simply because, again, each UTXO can be processed independently. Once those transactions are all grouped into a block, it's broadcast onto the chain and everybody's happy. You don't have to worry about the transaction ordering because each UTXO has its own state. That is a critical point to understanding the smart contract features that are built into Bitcoin and what we're advancing now with Bitcoin Cash, with the Cash tokens upgrade that's coming, almost next week, about 10 days from now.
10 days,
yeah. So I might be spiraling off and not directly answering the question anymore, but I really wanted to give that background on how it works and why it's important that we're scaling with the UTXO model. Much like John said, I'm also a firm believer that EVM ultimately may not scale to global scale, whereas the UTXO model, in computer science world, we can call that perfectly parallelizable or embarrassingly parallelizable. And EVM can't do that, again, because of the transaction ordering problem in global state.
And it's even a little bit better than that from the BCH perspective, from the UTXO perspective. That article that I shared with you, Anthony, if you want to share that with your viewers at some point, it's a great article written in 2019, and it talks about for programmers out there, one way to look at it is the functional programming model, which is famous for handling concurrency and state changes extremely well and being extremely scalable. So yeah, it's a good article to share. Sorry, Kalisti.
Oh no, that is a good point. And actually, building on that, just functional programming, having a deterministic output for every input is just also an important point that makes the UTXO model superior to EVM.
Yeah, I want to jump in on this topic and just make the point. This is something a bit of a broader point that I think people get a bit lost and confused in. Although perhaps with the UTXO system, people are more familiar with this. That people think Bitcoin, BTC, after the chain split, they got all this traction and then they kind of failed to scale, right? And there was all these problems. Now, that was a political problem, not a technical problem, right? If they had raised the limit, it would have been fine. It wasn't that they were running out of hard drive space or anything like that, or that the devs couldn't figure it out. No, it was a political and community problem. Then Ethereum got a lot of traction, and they also sort of have failed to scale, again, with people talking about roll-ups and what are they doing, and they've changed their plan a couple times, and proof of stake was sort of partly involved, but now that's not really the case. All these things, right? So a lot of people looking at that from the outside, they don't understand the difference, that was a technical problem. They're running into technical, not political problems. They're actually all united, but because they've done the account model, they're now a bit stuck. So from the outside, a lot of people seem to have got this idea that once a cryptocurrency starts blowing up, inevitably it's going to have some kind of scaling issue. That's not true. It's just that there has not been the coincidence of a UTXO model that also got a ton of traction and proved that Satoshi's original plan worked, right? And that's another area that people don't understand all these details. People don't understand that the reason Bitcoin was so exciting and got so much traction in the first place was because a lot of the very earliest people who were involved were obviously technical people, coders and cryptographers and so on. And they understood that this will work at scale, right? If Ethereum had been the first launched cryptocurrency, people would have looked at it and said, okay, kind of interesting, but we know it's going to get to about the size it's at now, and then it will kind of conk out, right? The reason Bitcoin got so much traction and was so exciting was because everybody thought, wow, this really has legs. And even those early people who were able to imagine into the future could see that it could work. So it was a political problem that roadblocked that, and Ethereum is on a technical issue. So it's quite important to understand that in the broader crypto context, I think.
Right. As I understand,
did we answer your question at all, Anthony? Sorry.
Well, what I'm really looking for is the information that you're providing and trying to understand the grand scheme of things, and for the viewers to also understand more or less everything that we're talking about here. So I would say so. And as I understand it, Ethereum went with the account-based model way back when, in 2013, around that time, because they didn't know how to put smart contracts into the UTXO-based model. Is that correct?
They knew how. They knew how, but Vitalik knew that Blockstream, Digital Currency Group, the MIT group, he knew that they weren't going to support it, that they were going to actively oppose it. He knew it was a lost cause.
Quick plug here for anybody who doesn't know that history either. There's a documentary on YouTube called "Who Killed Bitcoin" that explains the relationship of DCG and Blockstream and all of those players in the context of what we're talking about here. Just wanted to throw that out there real quick. Yeah,
that's good. So he knew that it wasn't going to work. That's why he left. That's why he did something else. Because the original, like I was saying before, the original maximalist idea was totally non-toxic. It was just that, hey, Bitcoin will learn from everybody else and do things also, and will become more and more powerful over time. That was the complete idea of Bitcoin back in the day. So so he had that idea. He's like, yeah, let's make it really powerful. Let's go even further. And but he knew he was just going to be opposed at every turn, so he took off. And
that
what he
doesn't
wanted to do
explain
was
why
significantly
he
different
didn't
also.
launch a UTXO chain though. It explains why he
Right,
didn't build on Bitcoin, but
right,
not why he chose
right.
the account model instead. Do you have a
Yeah, I
And
don't know
idea
frankly,
why?
the
exactly why
account
he
model is
chose it,
easier.
but he chose. Yeah, it's easier, but I mean, Vitalik is a genius guy, so it's not like he couldn't have imagined something else. But um, I'm not sure exactly why he chose the global state model. No, you have to remember that back in the day when ETH was created and for many years, it was not a DeFi platform. DeFi didn't exist. The phrase didn't even exist. It was just the tagline was the world computer, I think. I think that was it. Um Ethereum was the world computer. But is that right? Am I getting it wrong? I think that was it.
I think that's right.
Yeah, the world computer. So it was a completely different concept. They're like, yeah, it's computing power that you can pay for using, you know, magical internet money was was the concept. And then that didn't go anywhere. That had no legs. Not that it was necessarily a bad idea, but it just didn't go anywhere. And then somebody figured out ICOs, and then DeFi world just took off from there. So yeah, but I don't know the answer to exactly why he chose to use a global state model. Yeah, it makes me wonder because
Simple and
he is a
easy
very
and simple
smart
is
guy.
good, right? Because he is smart. And so if he's a smart guy, he
I don't
might
know.
just think simple is good. And then because it's an unprecedented technology, we don't necessarily know the scaling implications until later on once we hit those problems.
Yeah, and not only scaling implications, yeah, but there's a lot of things where when you're working at the ground floor on the foundation and you're kind of scratching around in the dirt at the beginning stages of something that you think, you know, if this really like at 8 billion people, this might not work that well. And it's like, yeah, that's not tomorrow. That's way down there. You know, it's like your imagination doesn't quite reach that point. And so it's possible that they was just trying something out. I don't know. Um, yeah, because it's really hard to imagine the context of when it was created. It was completely different from today. It does nothing like the state of things today. But that's a part of why I think all of us love Bitcoin Cash and build on it, is because it does have that very long-term view in mind, and is thinking, you know, okay, how does this work at a billion people? And what are the steps to get there? You know, we don't go from here to a billion people, but yeah, I don't know. I suspect it's a mix of just not having the concept that, wow, this could really take off. And he just wanted to do an experiment. He just wanted to do the world computer and see how it worked. So I don't know. Yeah, and doing that with UTXO would have been more challenging. So I saw on the UTXO Alliance site, it says something about how EVM made it harder. The smart contracts are harder for people to program with, but really that's not the case. Global state and EVM model is way easier to reason about than functional programming model. So at least for somebody who's not accustomed to it. So yeah, no, EVM is just easier to make and then also to program for. It's just harder to manage, which is the problem.
So I think, given the context and history, and thank you for having a bit of patience with my ignorance surrounding some of the aspects of that history, we weren't all as fortunate to have seen the potential way back when, right? Programmable smart money back then. You know, the news headlines around the sort of BTC chain was, you know, it's a money laundering dark web cryptocurrency thing, and everybody should probably stay away from it unless you want to go to jail. That was kind of the consumer point of view. And then it hit $100 and everybody's like, oh, whatever, you know, $100 is not all that much. So, but given the context, I think this is very important. Is it seems that the original the split here, and BTC, they hit their wall. Ethereum is now, obviously, everybody knows they hit their wall. And kind of the whole entire industry is warped by several choke points. And we've kind of gone down kind of an alternate timeline where now it's all account based and native tokens on top of Ethereum and gas fees, and we have meme coins. And that was really never the vision in the first place. And scaling is given out to third parties to kind of figure out and produce, and hopefully it doesn't ruffle too many things up. What do you guys think about, because basically Ergo and Bitcoin Cash and the UTXO Alliance in general, we share a lot of similarities for the most part. We're mostly all proof of work. We all believe the UTXO model is much better than the account-based model, but yet everything we're doing or everything we're championing is unpopular, right? There's an environmental narrative around proof of work mining. They want to propose a certain mining tax here in the US. So every possible avenue to stomp out innovation is being done. The usefulness of proof of work, the usefulness of UTXO, it's all been abandoned by the majority of users and institutional investors that are speculating on the most attractive short-term profits. And the actual potential for this technology is often overshadowed by bad news and rug pulls and things of that nature. How do you guys envision the future going forward with BTC, and where do you think that will end up? And what is the stage now with general protocols? And as you move forward and actually do interesting decentralized peer-to-peer things using smart contracts, and who else is building on Bitcoin Cash? Because all of this is it's a very similar thinking, right? We don't want any custodians involved. We don't want any middlemen. We want to see scaling solutions, but we also want to not infringe upon the potential to scale as well. For the sake of immutability in of itself is not enough, right? Which is also why Ergo was created. So it seems very interesting. It's like you guys are the original Ergo, or at least the philosophy that there has to be some better alternatives to what was currently out there, which is number one and number two currently in the market cap. So I think we all kind of share that. I know there's a lot there, so maybe we could start with proof of work. What is your view on this narrative that it's harmful for the environment and ultimately unproductive as a means of a consensus layer?
I want to beg one of the other guys to answer that, but I just wanted to say one thing first, is that again the answer is the same thing to a large degree. The reason it didn't scale and the reason it has this horrible reputation in terms of energy consumption and so forth is the same reason. These are all the same thing. This is a political issue back that started in 2014, 2015, even a little bit earlier in some regards. It was a political thing that happened, a social political thing that happened within Bitcoin back in the day. So yeah, that, like Jeremy said, it really looked like sabotage because it didn't make any sense. Like everybody in the room was saying, what, this doesn't make any sense. What's going on here? And the end result was that UTXO got, derailed and kind of abandoned and derailed and had to reboot, with Ergo and Bitcoin Cash and whatever, everybody else who thought, no, wait, UTXO works. Wait, what's going on here? Right. But that derailment was an incredible disruption of the progress of scaling towards, global scale money that serves the whole world. And so that disruption cannot be understated. It caused years of delay in the development of UTXO. So it's not, from our perspective, it's not an accident that things were delayed and it's unpopular at this point. It really looked intentional. But even if you don't think it was intentional, that's fine. You can't deny that it was disrupted. The whole UTXO experiment, so to speak, was disrupted greatly by that. And from our perspective, what you're doing and other UTXO chains is try to continue that experiment and say, no, wait, it actually works. But we lost the network effect, right? Because we lost that war, because Bitcoin Cash lost that war. If Bitcoin Cash had won the war, there would be no Bitcoin Cash. There would only be BTC, and it would be scaling to the world, and we'd be 5 years ahead of now today. So yeah, all of these things are quite connected. The reason it's not popular is not an accident. It was a result of all the disruption that happened, and we all had to restart and reboot. So yeah, sorry, but these guys probably have a more cohesive answer to the issue, especially about proof of work.
Well, my take is, like you're saying, that it's sort of unpopular was the key element there. And to me, that's not really a problem. It's a problem in the sense that it makes it harder to get adoption, and you have to do more education and so on and so forth. But like you were talking about, in the early days, you know, it was drugs and hackers and the whole thing's a disaster and it's going to fail and blah, blah, blah. That was the original Bitcoin mentality, is we're just right. It doesn't matter if it's not popular, we're right, and time is going to validate that. And that's exactly what's happened. Cryptocurrency has kicked off even with these disruptions that we're talking about. So I'm not really too concerned if proof of work is not popular at the moment, because all you have to do is wait another 5 or 10 years. And if we're here still working, still building, still improving on it, then it will pay off in the end. And at the, you know, in the short, like they say, the stock market, in the short term, it's a voting machine. And in the long term, it's a weighing machine. It's exactly like that, right? In the short term, maybe everybody's excited about like whatever EVM chains or whatever proof of stake chains. But in the long arc of history, they're going to eventually run into the problems with those things, which we're starting to see, right? The ETH sort of side of things was all, oh, look at all these problems with BTC. We're the more enlightened ones. We've got all the answers. But now they're running into their own set of problems. You know, they fixed one set of problems and they've created another. And nobody really knows as well the sort of proof of stake at scale that the EVM, you know, community is more doing, and ETH particularly is doing. It kind of needs a little longer to run before everybody's sure that there's not going to be unforeseen attacks, or there's not going to be a way of working around it, or even that it might just be captured at the economic layer, right? The whole beauty of the proof of work system is that you have a balance of powers, like in typical, you know, representative government. You'll have the legislative, the executive, and the judiciary. Well, in cryptocurrencies, you have your miners, you have your nodes, you have developers, users, and businesses, right? And they all cooperate together, and they all have not a vote exactly, but they all have a influence on what's going on. Now, taking the miners out of that picture is a big move, and it changes a lot of the incentives involved. And it's kind of similar to that earlier point I made at the start, that if Ethereum had been the first launched crypto wouldn't be an exciting thing. Like, a lot of people wouldn't have got onto it. The reason everybody loved Bitcoin in the early days was because of mining, and because people were like, wait, this is a fair way to distribute coins. It ties the economic incentives to a physical reality of the, you know, it's not a self-referencing thing, which is what proof of stake is. The rich get richer by default, right? There's no requirement to put in more work. You just lock up your coins and you can sit at the top of the economic pyramid forever, right?
Very similar to the fiat standard as well, right? Self-referential, not connected to reality. Yeah.
So in that sense, I'm very confident in proof of work. Proof of work is doing fine, actually. So one of the other great reasons to love BCH is the fact that for the last few years, all this work and energy and investment has gone into Bitcoin mining, right? There's a huge industry, massive. And even though BCH only has a tiny share of the hash rate, in a scenario where it's gaining adoption, it's essentially just benefit. Those miners are just migrating across. So BCH is sort of under the umbrella of that huge, all the effort and ironically all the fees that are paid by BTC users when they're transacting. They're paying their high fees, money that is then going to miners to develop their operations and increase network security. It's increasing their network security, but it's also actually increasing ours, which is very unique thing for BCH that a lot of other chains, you know, even if they are proof of work, can't benefit from that titanic network effective mining industry. So in that sense, I'm very happy with proof of work, even if it is unpopular. Everyone else will learn in the end.
and also it's very important to to address, just to make sure it's clear to anybody who's listening, right? It's not that that people necessarily think, oh, using power is a good thing or whatever, right? Like, okay, it's a necessity is more of the concept, right? And it's a trade-off. It's a cost benefit. What do you pay and what do you get? And the proof of work security is qualitatively different than proof of stake security that you get, and the qualities of it, the way it behaves are fundamentally different. Like, go and try to fork the Ethereum chain right now, and you can't change your validators. You're still validating with the same people. So the proof of stake, the people in control of it, doesn't change when you fork, which can change with proof of work, right? It's always from the outside. It's always an external actor who's providing the security. So yeah, with Bitcoin Cash and probably I think with Ergo and many others, right? The idea is not to say, yay, we're spending lots of energy. It's the idea that, hey, if we spend a certain amount of energy, we can get these huge benefits of having a permissionless global economy that's very low friction. It's accessible to everyone. Anyone can participate. It's not necessary to have these huge intermediaries that control and regulate exactly what you can do with your money and so forth. So that ability to do that is going to be more valuable than the cost. But when you're doing something like BTC, where it's, like I said, like Jeremy said, it's a political issue, and you limit it, oh, you can only do so many transactions. Well, then the utility of it is tiny. And you have this tiny utility divided by a huge amount of power, or a huge amount of power divided by a tiny amount of utility. You're getting nothing for your investment. But with Bitcoin Cash and scaling chains, the idea is that you're going to get a huge amount of value for the investment of that proof of work security.
All right, I'm gonna have to bounce. So sorry, but
take care, Jeremy.
Thanks for having me on the show. I really enjoyed it, and I'll leave you these cable guys. Anthony,
see you, Jeremy.
Thanks. Bye.
Thank you, Jeremy.
See you, man. Chrissy, I'm sorry I interrupted you there. Sorry about that.
Oh yeah, no. I mean, it's a little bit cheeky, but I mean, just like a little bit of a thought experiment about proof of work and proof of stake, right? You want to build a bridge, okay? You have a pile of bricks, or you can buy a pile of bricks. Okay, who's going to actually build the bridge? The people who lay those bricks, or the people who invest in a bunch of bricks? Well, I might be able to invest in a bunch of bricks and supposedly manage some bricklayers, but it's ultimately the bricklayers that are getting that work done, right? So I mean, like, investment doesn't build that bridge, and so I mean, translating back to proof of work, proof of stake, you can really apply that to everything. I've really been thinking about this lately in terms of just about everything in life. It's really starting to hit me just very recently. Proof of work applies everywhere. My own job, when there's something that we actually build, at the end of the day, that thing was built with real effort. It can't, if you invest in a company with just pure VC money, and then that VC business goes and spends all of their money on junior developers and ping pong tables, are they going to build anything? No. But if you have somebody who's very dedicated and they use their free time to build a killer product, that sweat equity, that's worth way more than that VC 10 years later.
Right.
It really applies. It's
That's an interesting distinction. Financing the creation of something like a bridge versus actually gathering the materials and the cost of actually producing the bridge, which are not the same things, right? So when you apply that to a consensus layer, it's really yes, you have to finance and buy the equipment in order to mine and things like that at scale, but it becomes a business model versus simply voting with your bank account, right? Buying coins outright.
Right, there's actual capital expenditure there. Once you buy a mining unit, you are invested in the network. The rest of the network knows that you're invested, without a doubt, and that investment will change based on the profitability of energy to mine. And so going back to what John was saying about the utility, this is quantifiable. we can literally measure transactions per joule. How many transactions can we get into a block? How many joules of energy are securing that block in terms of hash power?
And then
With
if that block has a gazillion transactions in it, then it's extremely efficient, right? It's going to be
Yes.
incredibly more efficient than the existing legacy financial system. It'll be, orders of magnitude more efficient and useful than the legacy system. Yeah, once you get there. But
So
if you artificially cap that, then you're definitely not going to get there, and it will be wasteful.
Mhm.
so it seems that we already, as we believe in Ergo, we already have the tools available to build better programmable money to be able to scale at a mass global level. And it feels that between a BTC and Ethereum, they kind of had fragmented answers in both camps, and nobody was really able to wrap it all together, which is the programmable money with the account-based model and the non-programmable money that is in the UTXO based model. And between the two, there you have them at 1 and 2, but they also have so many limitations. Maybe it's just that it's just way too early, right? It's very easy to grasp Bitcoin's concept in 5 minutes, right? I buy this thing and I hold it and then I sell it when I'm ready and nobody owns it. Sounds like a good thing to me. And kind of it has to come from the architects, people such as yourselves that envision doing more with these things in order to be able to have like the common person feel the need to use those things, right?
Mhm.
When you're talking about the products you're building with general protocols, I can already feel massive amounts of skepticism saying, well, we already have that with institutional platforms. Why do we need this other one that I don't quite understand, right? And that pretty much happens also with Ergo as well. Well, the technology sounds great and all, but what makes it better than what I'm already accustomed to? And that's really what it all comes down to. So if you build it, they'll come eventually, right? I wonder how you guys.
No.
Not really. No, it's a lot of work. Marketing and sales is a huge amount of work to get people to use things. Yeah.
I mean,
Sure,
build it and they would
yes.
come isn't necessarily true just because, I mean, we're living this reality right now. I think we can objectively say that Bitcoin Cash has some of the best tech in the entire crypto space. I think Ethereum and Monero also have some of the best tech in the crypto space. We can objectively say BTC kind of has some of the worst tech in the crypto space at this point.
Right.
But
and it was intentional, right?
that's number one market cap, right? So clearly build it and they come doesn't mean anything in this case because we're still losing to fiat, right? We still don't have we're still only $1 trillion total crypto market cap, right?
Yeah, but sorry, I reacted too strongly to that particular point because we've viscerally felt that point and learned the hard way that it's not true. But your bigger point, yeah, of course, absolutely agree that there's so much that needs to be done. And we think it's totally possible. It's not an A or B. It's like, well, why not both? Why can't we have scaling and a whole money system? Well, both are possible, right?
I also want to back up
they originally, yeah.
Just because when we were comparing Ethereum to Bitcoin, you said that UTXO is not programmable, and that's actually not true. That was one of the main features of Bitcoin is I guess we're kind of calling it smart transactions nowadays here in the BCH camp. You have Bitcoin script again, like I was saying earlier. That is literally programmable money. That's what we have, and it's only gotten more rich and robust over time. So technically, smart contracts have always been possible on Bitcoin.
Yeah, and if you look back at 2014, 15, 16, there were lots of sophisticated proposals for BTC. It's not like people were dumb back then. They had the concept of how UTXO can become, like the Cardano's EUTXO thing, right? Like that stuff existed 10 years ago, literally 10 years ago. Those proposals were there 10 years ago. It's just that they were intentionally, as a political issue, they were cut out and pushed to the side, but it was there already. All the ideas and the seeds of it were there already.
Right.
It's also worth noting. Sorry.
No, what I was going to say is when I said a non-programmable money, I meant more as I should clarify the decision not to move forward with that. Right. You mentioned that there's a scripting language there that was always meant to always be fleshed out and become what you've referred to as the kind of the baton carrying with Bitcoin Cash. Right. This was always meant to be the original intent to always bring this programmable money and actually scale it, but it was chosen not to flourish in that regard with BTC, and just kind of hold it and hope that the next person buys it, and this is the value of it in of itself. So that's an important distinction. It was always there, but it just wasn't really taken advantage of on the number one market caps chain, which is why you know the schism again, this tug of war between we're going to scale, we're going to continue innovating, because technology doesn't stop. It's something that also with Ergo and many other chains, we also feel like you can't just stop. Technology compounds and gets better over time, and the further you stay behind, you may be immutable, but as we see, right, there is a looming problem with how do you incentivize miners to mine BTC if there's not going to be any block rewards to mine. It's just that brutal cutting in half. You need something else to be able to keep that network going, not just HODL and anything else is a shitcoin type of narrative.
Yeah, BTC has no leg left to stand on except price. It's its only leg left, because the whole immutable idea that you've mentioned several times is actually a complete farce, right? It's not. The protocol has not been immutable. It's been very publicly upgraded and changed several times, right? With SegWit and with Taproot,
even before SegWit, even before the split.
Before SegWit, So it has no legs anyway. We got tired of talking about BTC a long time ago in BCH ecosystem. Some people still talk about it a lot, but we kind of decided, hey, look, we lost the public relations war. For some reason, people decided that digital gold, some number go up narrative was the one. Be friendly to the legacy finances. Be friendly. Don't try to compete. Don't disrupt things. Be friendly with the US dollar and so forth, was the way to go. Somehow that took root and took hold. But we're trying to do the thing where, like you said, we take advantage of technology. We take advantage of what it is we want to do, right? We have a real intention, not just to get rich, but an intention to make things better, to change things, to disrupt. Because it's funny, right? Because a lot of people will, on the one hand, say, oh my God, the fiat system is so corrupt. It's so messed up. It has all these issues. Let's be friends with it. It's like, well, why don't we try to do something better? Yeah.
It's interesting you say that, because it kind of, that was also my feeling as well. If you look at the BTC maximalist, they champion when a bank offers Bitcoin services or something like that to institutional wealthy. The Bitcoin is gaining adoption, and it's very counter to what it was intended to do.
Right.
I don't want to harp on that too much, because obviously I agree with you 100%. Right. Otherwise, we would all have laser eyes and just
We're not in the most popular group here, so that anybody who's working on this has thought about it quite a bit and has a strong intention, right? Yeah.
So with general protocols moving forward, I noticed on the website when I was doing a little bit of research prior to this interview, a lot of the keywords that strike out to me in the philosophy behind what you're building: open source, peer-to-peer, non-custodial, decentralized. So if, God forbid, something happened to you or your co-founder or any of the other people that work on these types of things, kind of the code lives on, so to speak, and somebody else can continue where you left off. And
Sure.
it's important to note that these types of systems, when built properly, are really unstoppable, because ultimately what you're just doing is programming code that lives on and allows you to use smart contracts to use money in many different applications. It's something that we share in common. What made you kind of take that initiative? I imagine, John, you must have a lot of grit to be able to continue building in an unpopular way against the mass of the crypto industry. You know, it's not easy to do the hard stuff that may not be the most marketable, may not be your next meme coin that just gets influx of money, but yet is the most resilient way of building. So I just want to get to the bottom, what really drives you to actually take these initiatives and build these types of resilient, products with general protocols?
Yeah. Well, thanks for the question. Well, why I think I explained a bit about why we chose Bitcoin Cash is because we have many motivations, right? We're a team of people with many motivations. One of the common ones is we'd love to make some money, right? And in the long term, what we believe is that the UTXO model, for all the reasons we've discussed up to now, and specifically for us, Bitcoin Cash is going to be the best place, and we are the ones helping to build the foundations. So, we're going to be built into it to some degree, whether just our legacy of our code or the governance models that we help to set up, or the actual company, whatever it is. We want to be part of that. We're growing that, and we want to grow with it. So we think that's the long-term thing. So because there's other ways to make a dollar, right? To make a Satoshi, whatever, you can trace trends, which works very well to a large degree, right? I mean, a lot of people got rich on ICOs and Ponzi's and whatever for the last many years, staking and so forth. You can chase those trends, like make the 15th or the 1500th Uniswap clone or whatever. It's not a terrible way to make some money. But for us, that's not why we got into any of this in the first place, right? We have various motivations, but for me, it was the why part of it was literally, over as I got older and I realized, wait, this, various things are screwed up. Various things are great, but various things are screwed up in the world, right? Could be much better. In the fiat system, which I only learned about because I got into Bitcoin back in the day, and then I was like, oh, there's this thing. This is how money actually works. And the more you learn about it, you're like, this is bizarre. It can't really be like this. This is insane. It's not connected to reality. And there's just this shared delusion that it's going to work without any kind of connection to reality. And so the more I realized that, I was like, hey, there's something. Maybe I can actually do something to make things better. Because for the most part, most of us feel quite helpless, right? All these powers and gears and cogs are massive in the world, moving ahead. They're kind of unstoppable. You can't, everything's inevitable. Things are going to get, go in whatever direction they're going. But then I got the feeling like, hey, wait, maybe there is something I can actually do that will make a difference. So let's try it. And some people who had the same kind of thought process as me, we got together and founded General Protocols. And at that point, we had to decide, all right, so, specifically, what is it we're going to do? What's the thing that's the correct timing, that's actually going to make money, that moves in the right direction and doesn't take shortcuts that end up being like, well, we kind of want crypto and decentralized, but also we're going to be, totally part of a legacy finance system. You have to be careful. And if you don't have that long-term vision, it's very easy to just go off on a tangent and lose the whole point of what you were doing. So yeah, it was that we wanted to make a difference. And we think that what we're building is the best long-term bet. And so we want to get wealthy building a company and make a big difference.
Fair enough. Could you talk to me more about BCH Bull in a practical sense, kind of the nuts and bolts of what you can do with that?
Sure. So on the surface, it's just bets on price, whether price is going to go up or down. For cryptos and metals, so gold, silver, cryptocurrencies, fiat currencies. We're considering just for jokes and fun, we're considering adding a BTC fee price oracle, so that you could bet on the price of BTC fees going up or down over time.
Holy
So we're
crap.
considering doing that for fun. But yeah, so on the surface, that's what it is. But what it really is, if you read the AnyHedge white paper, what it is that, Bitcoin Cash is all about the long game, about long-term adoption and making it useful for everybody in the world to do all the things that they do with money, not just, day trading or whatever. So the way that works is, if you have these AnyHedge contracts, then you have a stability solution that's perfectly in line with the ideas of, trustless, non-custodial, permissionless ways to do things. So it's in line with that. You have a stability solution, and then merchants, once there's enough speculative liquidity with people just making price bets, it's a similar idea to the traditional idea of commodities and futures markets, is that once you have enough liquidity, the actual economic players who need stability, like merchants and other businesses that are building and using Bitcoin Cash, but they want to have stability in some other form, US dollars or euros or gold or whatever it is, those actors can then just pull from the pool of liquidity, the speculative pool of liquidity, and run their business without having to worry about volatility of Bitcoin Cash. Because between here and global adoption, at global adoption, price stability won't be an issue. Not really. Similar to the way that people see the US dollar today as, oh, it's stable. It is. They don't even think about the volatility of the dollar, really. Most people don't. So when you're at global scale, that will be the way it is. But until you get there, price volatility is a real issue. And so having a stability solution that works on Bitcoin Cash natively is permissionless, non-custodial, it ticks all the boxes so that it's a low friction way to do things. That's what BCH Bull is. It's the first step of producing speculative liquidity. And once we have that speculative liquidity, then you can build on top of that. Merchants can start to pull from it and get stability in whatever terms that they want to get it in.
Are there any other people that people should look into that are building on top of Bitcoin Cash as well? Because that sounds like a fantastic idea, of course, right? And ultimately, the user adoption of protocols built on top of a chain also obviously drives up the liquidity and trading volumes, and ultimately attractiveness for the native asset, whatever that may be.
Yeah, others to look into. I mean, there's the Zapit wallet. If you look, I think it's zapit.io, I think. Mm-hmm. There's the Zapit wallet, which is heavily focused on India, so commerce in India. And they have created P2P exchange, so you can do P2P exchange there. They also have integrated with the UPI system so that you can pay without doing KYC. You can pay with Bitcoin Cash through the UPI system in India, anywhere. So basically, you can pay for anything in India with Bitcoin Cash. Then there's Paytaka, which is another company building in Indonesia.
No, Philippines.
I'm sorry. In the Philippines. Sorry. In the Philippines. So Paytaka is building a very nice wallet that does things that make sense locally there. So and around the world, but especially in the Philippines. So there's a lot of people who want to be able to exchange. So they have an exchange facility that I believe it's P2P. I'm not sure the exact details, but then they've also integrated AnyHedge contracts. So AnyHedge as a protocol, you can do those AnyHedge contracts on Paytaka wallet. You don't need to use BCH Bull to do it. It's just a protocol. They interact permissionlessly with no need for contracts or anything like that. I mean, like paper contracts. There's no need to make an agreement with them about using the services. And then there's Callisti here, who's I don't want to say what he's building because he might not want me to say what he's building, but he's building stuff as well. Yeah, Callisti, can you say anything about what you're doing or?
Yeah, I mean, in about a week or two, hopefully, we are going to be releasing an app on the App Store, me and Jeremy, and we're really excited for that. I'm not going to say what it is quite yet because we're not quite ready for that, but it is coming extremely soon. So I mean, keep an eye on Callisti.cash, redirects to my Twitter. Announcements will come there. Oh yeah, I'd also probably shout out Flowy, also building for Bitcoin Cash.
Yeah, and then there's also one that's still kind of under check. So I personally have a lot of confidence that this is going to be fine, but Bitcoin Cash ecosystem is still trying to figure out whether they like it or not. But there's this thing called BCH Guru. So I sent you a link to it, and you should really go watch the video of that. Your viewers will enjoy it, whether they hate or love Bitcoin Cash. It's still a fun video to watch. So I sent you that. It's a bch.guru, I think, is the site, and you can find them on Twitter too. Yeah, so there's a lot of people building, and I think the reasons are all very similar. They want to make a difference in the world. They think they can actually make a practical difference, not just hopium and unicorns. They actually want to make a difference, and they think they can make a difference and make a dollar, make a living while doing it. I think that's a lot of the common element of it. I assume it's the same for you, Anthony. What are the reasons you're into it?
Well, for Ergo's case, it's a lot of the philosophy. It's exactly the same, right? We don't believe that innovation or technology should have stopped in 2009. We believe the UTXO model is the best way to go. We believe things need to not have heads in the DApp space, right? If you create a decentralized application, it should not have any central point of failure. You should be able to audit the code. Anybody go in, copy it, improve upon it, and do those types of resilient things without having custodians, without having any of the things that we see create the news with bridge hacks or meme tokens or
bank collapses and
collapses,
exchange collapses. Yeah,
it's just programmable smart money. Ergo, same thing. Trying to take the proof of work concept and also making sure that the block times are resilient. They're not just looking for the fastest one in our case, but essentially being able to be used by anybody in the world to go and build out into the real world as well. We have traceability tokenized NFTs for commodities that's coming out through a decentralized exchange. Although there's a parent company attached with that, but it's really just using the blockchain for commercial purposes. And I think that, the tenets are exactly the same. We're not looking to sort of reinvent the wheel, just take the best parts of the wheel that was originally given and actually build things that are useful to people in the real world. But we have the same, I would say, if I may, the same types of issues that just because you do build it doesn't necessarily means that the users come and adopt it right away. And with Ergo, we have a very small foundation that is not nonprofit, and with that, they are able to give out grants and host hackathons and things like that. And it's basically a small treasury to foster some sort of attraction towards the ecosystem so people can build things with the tools that have been given from day one. As a developer of Ergo told me in last week's interview, I said, what would it take for us to be up there with the big boys if we have all these tools and Sigma protocols and all these fancy things, mixers and just all these technical things that are beyond the scope of my understanding, that are on par, if not better than Monero's as well. And basically, is developers find that programming with Solidity and building things on the Ethereum side of things can give them a very steady, stable, and attractive career long term. So that's where this kind of the alternative timeline has gone, right? And that's where a lot of the talent has gone over there just because of a buck. It seems.
I'll give you a slightly different answer to that. I don't think that's actually I don't think you got the best answer there. The answer is that people made a lot of money. That's the answer. That's it. They made a lot of money, and that attracted, that allowed them to pay for developers, to pay for development of infrastructure. And the second part of the answer is that literally a billionaire and buddies invested like $1 billion into the Ethereum ecosystem to develop infrastructure, training, companies, venture capital, and so forth. So the reasons it blew up were not an accident at all, right? There was a huge amount of effort and resources invested into the development of that ecosystem at a very timely and in a timely way. So yeah, it's kind of a unique thing that happened with them that won't really be reproducible in the same way today, right? We have just different set of issues to face today, but yeah,
it's not
the
a
short
sexy
answer is money. It's money.
Yes.
Yeah.
There's a lot of money invested in it.
Build things quickly and break things fast and for the sake of money. Yeah, that's basically what it boils down to.
Nah, I don't think I
build and break things for money.
Yeah, but I think Steel Manning is better. They just it was a extremely well-timed investment by a few people into doing all the things that needed to be done to make a viable ecosystem. And imagining that you can accomplish it without that investment is it's probably not going to make it, right? It takes a lot of work and investment to make something attractive to people. And provide a utility that's unique and at the time that was ICOs. So whatever you think about ICOs, that was what drew people in to really invest time and resources into it. So I don't know. It's better not to look down too much, right? Like I see it as if Ergo is successful, that will be amazing and great. And if Ethereum is successful and able to successfully scale and not get captured politically, that will also be amazing. And if Bitcoin Cash can do that, that will be amazing because, right, the thing to accomplish is not to be the singular, because, right, that's the toxic maxi thing, right? That has emerged only recently in Bitcoin history. The whole toxic maxi thing is not the original zeitgeist or anything of Bitcoin, right? It was that there can be only one is silly. So I think it'll be great to have multiple successes. And there's also an element of competition to that, right? So Bitcoin Cash ecosystem has a difference of opinion with Ergo about whether a foundation is okay. We kind of categorically say foundations are not okay because they're central points of capture. But, whatever, that's what we believe and that's how we operate and that's how we work. Who's to say what will work? And if anything does work to make things better, that'll be great. And if that's Ethereum, then that's great. If it's Bitcoin Cash, that's also good. Ergo, whatever it is. So yeah, I prefer not to look down on things, except BTC, which is kind of the clown in the room at this point.
And the other sibling that should not be named.
Yeah, we won't talk about
that. I think I know who you're talking about. I think that is
all you need is terabyte blocks, and then everything is solved. Yeah.
So I think that's a good. I think that's a good place to conclude, right? The common goal that all of these UTXO based chains have. Our approaches may differ slightly, or in many cases, greatly, right? In terms of how Cardano approaches things and how the proof of work UTXOs approach things. But ultimately the common goal is to continue pushing the boundaries of what's possible with cryptocurrencies and blockchain technology, and hopefully the permissionless non-custodial side of things that's really peer-to-peer and kind of the original philosophy around why we're here in the first place. So without further ado, I think you wrapped it up very well, John, in terms of
I think you did just now. That was great.
the common goals are there. I also want to concur with you about don't be the single chain maximalist. Don't fall in that pitfall, because there's talented people building up resilient systems wherever you look. And I think this interview is just a great highlight of that as well. I came in not knowing all too much, so I'm sorry if I miscategorized any little detail about
your homework
history,
very well. I really appreciate it. No,
yeah, really
it's great. And yeah, and there's also going to be competition too, which is fine. It's okay to have competition. We learn from that, so
it wouldn't be a free market without that, right? The technology is up for grabs anywhere you look.
Competition only makes us both stronger too. At the end of the day,
yeah. And even at the highest level, it's going to make fiat systems better too, because it makes them more honest. It's going to force them into some kind of connection to reality, right? So that's a good thing. You don't necessarily have to completely destroy fiat, right? Like just destroy it, raise it to the ground. You can have great benefits just by making a difference and disrupting things. So whatever happens. If you totally want to destroy fiat, okay, fine. That's sure. Might happen, but it might just make it more honest, which is also a good outcome.
It's definitely a unique time to be working on these things. They're extremely relevant. So, thank you for also just building the way you're building, right? Because you could have easily made it a walled garden of smart contract applications and protocols that, John is the gatekeeper and his people have the tools we want on this network. And instead you opted to put all the hard work out in the open so people can see it.
Of course.
Not everybody does that, as you probably know. So it's a rare thing to see. So
everybody that matters.
Caliste as well, thank you for kind of giving your input where needed. I think it was very valuable also having you in the room kind of to explain sort of like some of the elementary things for viewers. So I appreciate you as well.
Yeah, it was great being on, and yeah, you really did ask some quite pertinent questions, and you definitely did your homework.
Yeah.
So this was a fantastic interview.
No question sheet. I think if people look at the earlier interviews, I used to have a question sheet. I don't have any of these things now. So I guess, if you put in the hours, it starts getting better with time. Yeah, I did like half an hour of preparation.
Proof of work, my man.
Nice. Proof of work. There you go. Nice.
So, all
right,
guys.
So thank you very much for your time. It was very good to meet you, Anthony.
You as well, John, and Caliste, and obviously Jeremy as well. And I hope to meet your other co-founder. Due to scheduling miscommunications, I couldn't get Uname on, but I'm sure we'll have a follow-up interview. He's agreed to talk about general protocols a bit more as well. And I'll put a few links in the description as well for you viewers. Please don't just watch the interview and walk away. Try to really learn more about your neighbors and this UTXO community. And thank you all for watching. I appreciate everybody's time, and this was great. I enjoyed it as well. Well worth the midnight wake up call to get on.
Appreciate that.
All right.
All right.
Thank you all for watching. I'll see you in the next one.